Alcoa kicking off the fourth quarter earnings season in the United States last night. It looks like those figures seem to have set the positive tone for today.
Yeah. You know, Stephen, if you go back quite a few months now, you look at the actual results that have come out from the US and compare them with the Bloomberg consensus, the actual figures have tended to beat the consensus figures for quite some time now. And I think, although this may seem counterintuitive, given the fact that the US economy is still semi-comatose, in my opinion, the US corporates are getting a profound benefit from the fact that this is a jobless recovery. They're extracting so much more productivity from their existing workers that we're likely to see a record earnings year this year as the year progresses. So Alcoa, I think, is just the start of a lot of some very, very good and very positive news coming out of the US.
Yeah, what's your view on that? Because as Chris pointed out, we have over the last number of earnings seasons beaten all expectations. I'm just quite sure that we had pretty low expectations to begin with, that companies are so able to beat them so readily and easily.
That's right, Stephen. We've seen that Alcoa has come out with results that beat all estimates for their results for the quarter. It wasn't sky high, it was just better than estimated, and they also came from a very low base from the previous 2 years. They said also at their presentation, you know, that there is still a lot of growth in especially Asia and China coming from there. But China definitely going to be a slower growth story in the next couple of years, where they try to curb the inflation, and they have very, very strict measures on doing that, as we've seen. But the rest of Asia is still also a growth story. So I think it's a good thing for all resource companies going forward. Just maybe, as we all know by now, a little slower than we've seen before this recession.
Of course, we have seen some of those commodity prices picking up again today as well. Gold up, platinum and palladium up. We had some Chinese car numbers out earlier this week. Aluminium up, copper as well. So it looks like they are pricing in still a good recovery for commodity prices this year, despite the slightly slower growth coming out of China.
Yeah, I mean, look, as Mia says, you know, you can't have this kind of growth going on ad infinitum. But having said that, if you take China, and that China's not the only growth driver. I mean, India is coming very much to the fore as well. But if you take China as a good example here, it seems to be changing away from purely being an export-oriented operation into very much more an inward industrialization type of situation. And beyond that, eventually you'll get Chinese consumers starting to say, hey, you know what? We actually want to buy an awful lot more consumer goods. So we're in the second phase, and you've got the third phase coming through in a few years more time as well. So I think all of the ingredients for a sustained improvement in commodity demand are all there, but perhaps at a somewhat lower lick than we've been used to in previous years.
Mia, just touching on something that Chris mentioned, and that is that US workers becoming more productive, because we are seeing this jobless recovery in the United States. Companies recovering, not spending money on new jobs though. And I think it's a bit of a catch-22 situation really. They're sitting with strong balance sheets. They're waiting to see the recovery before they start spending money. But until they start spending money, they're not going to be creating jobs, are they?
No, I think exactly what Chris said, that this is a jobless recovery. We've seen Alcoa shed about 20,000 jobs during the last 2 years, which is a significant number of employees. But they've come through with a lot better productivities in this last quarter especially. Turning around from a net loss to a positive result is a really good thing for them. And, you know, if they don't need to employ new people fast, they definitely won't do it, as you say.
Is this a theme you think we're going to see from other companies as they start reporting, Chris?
Definitely. As I say, Stephen, we've been seeing it for quite a while. And it's interesting to contrast and compare that with South Africa. We saw the employment figures yesterday from AdCorp. And it was really fascinating. You know, I was chatting to Richard Pike about it. And I said, are we seeing a similar thing here with productivity? He said, no, we're not. We're actually not. Productivity is actually flat. You're seeing wage increases coming through quite considerably in South Africa, and employment's pretty much staying where it is. So companies aren't employing people, but at the same time they're paying their existing workers some quite nice increases. So your productivity isn't necessarily improving. So we're not getting the same kind of benefit as the US companies are getting.
In that case, Chris, what's happening in companies where there are big retrenchments? And I think a fellow bank of yours retrenched quite a significant number of people a few months ago. They have to make up that productivity, or do they just downscale the business?
That's a very good question, and you know, it's when we've been looking at what Standard Bank has been doing in that regard, and it did seem strange at this point in the economic cycle that they took such a radical decision to do exactly what they were doing. And maybe they are downsizing, but again, that would go against the grain. It seems so incongruous, again, at this point in the cycle to do that. But of course, it was here and in London. And look, I think with Standard, what has happened really is that some of the African countries in which they have a presence, perhaps not growing quite as quickly as they would have imagined 2 or 3 years ago. So I think I don't know, maybe in 2 or 3 years' time when we look back at this decision, we'll be able to get a clearer view as to whether it was a good decision or not.
What's your view on that, Mia? Because we've seen lots of numbers, so lots of jobs being shed in South Africa. Do you also believe that we're not matching that with productivity gains?
In South Africa, I think it's a very, very difficult situation, as we all know, with the jobless rates and the government promising the job increases through the next couple of years. Standard Bank, as Chris has said, it's a very interesting story to look at what the jobs they've actually shed. They have geographically grown quite a bit in the last couple of years, going into areas, like you said, in Africa that maybe didn't perform so well as they'd have thought it would have. This might be a cost-cutting thing for them, and definitely we'll have to wait and see for the results to see whether they could actually extract some value from that and actually increase their productivity there. I think still at a current share price, well, they've actually performed a bit the last week or so, but on a share price in the low hundreds, you know, it's definitely not expensive for a company like that with a geographical exposure of their sort.
108 Rand for Standard Bank today. Is that something you'd be nibbling at this stage, just looking at the recovery? Because the numbers for the year to December might be quite grim, but the numbers for December next year are going to be quite good from Standard Bank, I should imagine.
Well, I think they should be, Stephen, and not just for Standard, I think for all of the banks. I mean, as the year progresses, I think we should reasonably assume that the banks generally will start loosening up on their lending. There'll be more of an appetite out there from consumers and from corporates to actually start spending again. So that should be the case. But as I say, the thing that's bothering me more than anything else is the fact that Standard, which has up until very recently, you know, been the darling of the analysts out there, the banking analysts, they rarely put a foot wrong. And for them to have made such a radical decision, it says to me, well, do they know something that we don't? You know, maybe demand isn't going to pick up the way that has been anticipated. So I think we have to wait for a few months just to let the dust settle and see what actually happens out there before one can actually say, well, it's worth having a bit of a nibble at Standard Bank.
Mia, taking a look at another company with a big African footprint, that's Shoprite, out with a trading update today at 9.5% rise in first half turnover, helped by lower interest rates, being hurt a little bit by African currencies and some of its operations outside of South Africa. Your view on those numbers, because the Shoprite share price really no great shakes today despite that trading update.
Well, Stephen, we had a look at their share price over the last year. They've actually grown, the share price has actually grown about 45%, which is very significant. As we know, the retail shares in South Africa had a very hard run last year. So obviously the numbers should start coming through to support that share price run, because you know, it's actually people obviously who's not speculating is buying shares with expectancy of good earnings. The turnover of just over 9% is a very good increase for them, I agree, but we should just remember that this has actually been also a season just before the Christmas season, which always is a good season for them. Unfortunately for them, the strong rand has hindered their performance in the rest of Africa and other areas. But still, as I say, most of these retailers should actually show us great numbers now to actually support those very, very strong share price runs.
Chris, your view on those Shoprite numbers, the share price closing just below 95 Rand, so down a fraction of a percent.
It was over $100 a week or two ago, so it's come off a bit. Look, as Mia says, it's had a fantastic run last year, you know, reflecting the intrinsically great performance of Shoprite. Just looking at those results specifically, in a group sense, very much in line with what we're looking for. If you dig down a bit deeper, rest of Africa, I think, if on a constant currency basis, if you strip out the effect of the rand exchange rate here, up about 13%, and that's not bad for the rest of Africa. A bit lower than what's been in recent years, but still not bad. I think the one big disappointment, excuse me, if you can call it a big disappointment, because it's not a huge part of the business, is the furniture side. Only 4% up as far as sales are concerned. And that's significantly lower than what we've been accustomed to in the past few weeks and months from the likes of JD and Lewis, for example. So That was a bit disappointing, but I think the rest of it is very much intact. You know, Shoprite, Pick and Pay, Spar, these guys, they're not cheap. And I think what they're all reflecting is the possibility that we may get another international retailer coming in the same way as Walmart took out Massmart. So there may be some corporate action as the year progresses, or maybe next year.